facing criticism from the government over Reserve Bank of India's focus on controlling inflation rather than prioritizing growth. The newly appointed RBI Governor Sanjay Malhotra addressed these concerns on Monday. In his foreword to the Financial Stability Report, Malhotra expressed optimism about India's economy, forecasting an improvement in 2025 driven by high consumer and business confidence. He emphasized that the RBI's focus will remain on maintaining financial stability. The Indian economy is expected to accelerate in the second half of the current financial year. Malhotra also highlighted a positive investment outlook with corporates entering 2025 in a strong financial position. Joining us on the show is Ambareesh Baliga. Ambareesh, good to have you on the show. Good morning. Are you concerned about RBI's inability to cut rates, because that is what government pointed to a short while ago, and its impact on borrowing and consumption? And what's your outlook for 2025, this being the last trading day, the last day of the year?
No, in fact, that's clearly one of the concerning things. But then again, RBI also cannot cut rates just like that when inflation is still decently high. Unless the inflation starts coming down, especially the food inflation, I don't think like RBI can go ahead and cut rates. But I'm hopeful that in the February policy, they may cut rates, possibly 25 basis points. I would be surprised if it's 50, but 25 is what I'm expecting. But then overall, if you're looking at the markets, if you look at the macro numbers, most of them have been concerning. And then as far as the earnings are concerned, Q1, when we saw a downtick, we thought it was a blip. Q2 was quite disappointing, and that's the reason we started seeing the correction in the markets like sometime in October. And now Q3 earnings should start in the next 10 to 12 days. And again, I don't expect that to be any better than what we saw in Q2. In fact, it will be worse than Q2. So because of which, I think people are concerned, and because of which we are seeing this correction. And as far as the macro numbers, I talked about, look at the GDP, that's been revised downwards. Industrial production is down. GST growth has been flattening out. And like what I said earlier, inflation, I think that's still a big issue. Rupee has depreciated quite a lot, especially in the last 50-20 days. If you compare to the last year and a half, it's been, very stable. But then in the last 15-20 days, we've seen a decent amount of depreciation in rupee. And that's also quite concerning. So overall, because of this, I think the mood on the street, in the year end, as far as, and also possibly in the new year, maybe the next month or two, could be quite cautious to bearish.
You know, Ambareesh, I have to ask at this point in time, because it's like an elephant in the room. Everybody talks about it, whether RBI should now look at perhaps reconsidering how it calculates inflation, and whether, inflation in consumer items like food, vegetable, pulses should still be a part of inflation calculations, the CPI calculations, because as the government points out, RBI's inability to really, rejig and be able to provide some sort of relief to consumers has resulted in a degrowth and perhaps not enough spending, both discretionary and otherwise, on parts of, corporations as well as individuals.
Yes, possibly, because really RBI cannot control a decent amount of this inflation, especially the food inflation. It's not possible for RBI to control. That has to be controlled through government measures. So I think it's time that it was sort of de-linked, and RBI can go ahead with the rate cut despite high inflation on food. So I think that will actually trigger economic activity. So I think that change should be made, and let's see.
By when is your expectation for a rate cut in the coming financial year?
The total rate cut in the coming financial year, which is FY26, if we talk about, I'm expecting at least 1%, which is like 100 basis points in FY26, and like I said, 25 to 50 basis points in the balance of FY25. So I think that could come in the February, the meet.
All right, so February meet there's an expectation of a rate cut. We'll of course have to see whether the new RBI governor will bring in some sort of bonanza for people.